Hello traders and welcome to another video review. Today is Monday, November 20th, 2023. Let's find out what's going on the Forex economic calendar today. As you can see, there isn't many news scheduled for release today. During the Asian session, we got the People's Bank of China loan prime rate, which stays at the same level of 3.45% as expected. Then we got the ECB Lane speech at 6 o'clock, and the German PPI data had been published already. The PPI data in Germany were in line with the expectations of minus 0.1%. At the end of the day, we got 20-year bond auction in the US, and then some data from the New Zealand in form of the trade balance, monthly and yearly trade balance. So as you can see, pretty non-event day. It's the Monday today, the beginning of the new trading week. So in that situation, let's just review the majors on the beginning of the new trading week on Monday, and we are going to start with euro dollar. The 4-hour chart of the euro dollar is showing us a nice bounce towards the new swing high located at 1.0936, and this swing high is right now located between those two levels here. This is the zone, the clear supply zone, 1.0887, 1.0942 is the zone, and right now we are trading inside of the zone. The next target eventually for the bulls is located at 1.0962. This is the Fibonacci retracement level, 61% on a weekly. I will show you that in a minute, and we already broke above the 50, so this level is no longer necessary. So intraday technical support 1.0996 key. The other technical support is the level of 1.0888. We got this slight range here with the intraday level at 1.0822, and then big nice technical support levels and demand zone is located between 1.0771 and 1.0748. You possibly notice that we are moving higher. Nevertheless, if we could point out something, is of course the building bearish divergence. The bearish divergence between the price and the RSI oscillator. There you go. So the market is doing higher highs, is making the higher highs, while the momentum oscillator is not making this higher highs. So the last push to the upside was made on a way lower momentum than the previous one, which usually means that we should expect some sort of the pullback or correction on the 4-hour chart, because the bearish divergence will be played out by the market participants soon. Momentum is still positive, is still strong, is low right now, roughly above the level of 70, which means that market conditions are still extremely overbought. So please don't be surprised if there is any sort of the correction or a pullback on the euro dollar. If we switch to the weekly, you can clearly see on the weekly time frame chart that this recent movement to the downside, which lasted about 18 weeks, okay, has been retraced in a great way, and a great territory, and 61% is about to be hit. This is the level where the blue arrow is, right? So what we should expect is, this is the direction to the downside. This is a counter trend movement, and then downside should be continued on the weekly time frame chart. On the euro dollar, only sustained breakout above this big black line would change the temporary outlook to more bullish. Okay, so that was the euro dollar. Let's find out what's going on the British pound. This is our British pound chart. We don't need any Fibonacci right now. Our situation with the with the correction to the downside didn't actually play out that deep. However, we got this movement to the downside here, so we got the ABC running flat correction done. We broke above the wave B high, which is at 1.2453. Now this is going to be intraday technical support, and the market is heading towards the last swing high from last week at 1.2506. Please notice that just above this level there is still another technical resistance, 1.2548. so this is a very nice zone here. Of course, this is the supply zone between these two levels. So that's the intraday technical support. This level here, 1.2427, will act as the technical support as well, and of course we will leave this technical support here at the level of 1.2376. Let me just get rid of this line here, so we can switch our supports around this level. There you go. So we got everything ready on the British pound. Nevertheless, the momentum is still strong, it's still positive, it's roughly touching the level of 70. There is no bearish divergence, and if we just take a look from a perspective on the current situation of the British pound, we can see very nice movement to the upside, very nice wave progression to the upside. So we should prepare ourselves for another movement to the upside if the level of 1.2505 is done. This pattern here might look as the V pattern, which is a continuation pattern, or a cap, and we need a handle, which is a trend continuation pattern as well. So please stay focused and be prepared for a potential breakout to the upside on the British pound. And last but not least, another major pair we are going to take a look at, it will be US dollar to the Japanese yen. Why? Because we got very interesting situation here. So what is going on? As you can see, we broke to the downside here on the US dollar to the Japanese yen. We broke below this 2 months old trend line. Okay, so right now there is intraday technical resistance located at 149.21. okay, that the technical resistance is here. The trend line, if you bother to take a look here, has been tested as well. So we are tracking this movement quite well, and right now we are approaching the lows of the last day of the October 2023, located at 148.71. so this level might be tested very soon. When we break below this level, the next target is 148.18, and then the key technical support at 149.39 might be tested as well. So the outlook is to the downside, despite the fact that the momentum is right now extremely oversold. There is of course is below the level of 30, so there might be some kind of a pullback to the upside, but please don't expect too much from this market. It looks like the bears are in full control and might push the market of the US dollar to the Japanese yen even lower. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.